BIS Commodities with some closing comments on the week. Let's just take a look at the grains to see where we ended up on the week. Corn, July corn closed down 25 cents on the week at 6.36. We did see December corn close 24 cents lower this week at 5.29. July beans were up 11 cents on the week at 13.98. November beans were down 16 cents on the week at 12.05. We did see July wheat close 18 cents lower at 7.03. The dominant factor this week, besides the weather forecast and the planning, the slow planning pace, was the monthly supply and demand report. We did have two balance sheets to look at. One, the old crop balance sheet, and the new crop balance sheets. No surprises came today in the balance sheets for new and old corn. We've seen our ending stocks increase only a couple million bushels, essentially unchanged from last month at 759 million bushels, a little bit larger than what the trade was guessing. We did see them back off corn exports, but put that demand back on the ethanol grind side of the equation. New crop balance sheet came in with a large stocks number, which the trade was expecting. We came out with a 2 billion bushel carryout number. The last time we seen those type of levels was 2004-2005 growing season. The trade was looking for a large number at 1.97. So essentially wasn't a huge surprise in the corn market from the report. Soybeans was pegged at 125 million bushels coming in as far as the trade estimate, and that's exactly what we came out with, unchanged from the last month's S&D. We did see a little bit of a bearish number in new crop beans, where we did come out with a 265 million bushel carryout, essentially more than doubling this year's being carryout. The trade was looking closer for 240 million bushel carryout. Old stocks on wheat came in at 731 million bushels, right in line with what the trade expected and what was reported to us last month. Taking a look at the livestock market, we did see cattle close $1.52 lower on the week in the June contract at 120.30. This week was a week that we did see cash trade lower at 126, 127, down from the 130.31 level last week. Probably a weaker cash trade due to the excellent hedging opportunities with cash trading at such a premium over futures. It was a week that we did see the record cutouts on the choice pop over $205. So as the fundamentals are bullish, futures are having a hard time catching up with cash at this point. Taking a look at the lean hog contract, we were down $1.37 in the June contract at 90.80. Hogs are suffering a little bit from pork exports. We're down 15% for the month of March. The pork cutout essentially was unchanged. Packer margins are believed to be operating in the red. Any type of rally into the mid-90s will be viewed as hedging or selling opportunities. A few other things to look at this week. It looks as if the stock market, the Dow, is going to close over 15,000 points or right at it. The S&P is up over 1,600 points. The energies and metals sold off on the week as far as an overall commodity sell-off by the macros. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.